The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined today on the old all-star panel by two returning regulars. It's been quite a while for both of them, so it's nice to have them both back. Starting off with the man from the mountains himself, a.k.a. Mr. Apple, a.k.a. Mr. SLV, a.k.a. Mr. BBI, one Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, welcome back to the show, sir.
That is a lot of ticker symbols. Happy to be here as always.
You are growing in your nicknames on every show, sir.
There we go.
There are definitely worse fates to befall you.
That's true. I've been called much worse. Just ask my wife.
And speaking of much worse, we also are joined today by another man who hasn't been on the show in a while. He's joining us after a long sojourn in sunny Florida. The man holding down the OX hot seat today, none other than the return of Mr. John Grigas. Mr. Grigas, welcome back to the show, sir.
Thank you. Yeah, it has been a while. I feel like I haven't been here in weeks, but good to hear Tusaw's voice, too. I haven't done a show with him in quite some time. I've been doing the Monday regular show. But no, the trip to Florida was good. A couple of highlights. There were actually two highlights. One was taking my 5.5-year-old son out on a fishing charter where the waves that day were very big, and I thought he might actually fall overboard. But we were at a point where we were driving against the waves, and my brother-in-law looked at me and he goes, "This is as bad as Deadliest Catch." And not less than 10 seconds later, the captain threw on the soundtrack for Deadliest Catch, which I think is Steel Horses by Bon Jovi. So you kind of get the picture there. That's about how bad it was.
Did he get sick, the little guy? Was it like a rough introduction to fishing for him?
He was great. We all had Dramamine. My son and my nephew looked like they were drugged and about to pass out. I guess a small side effect is drowsiness. My other brother-in-law, even though he took the Dramamine, never got up because he said if he got up, he would throw up. So it was pretty fun. I have a couple pictures of him where he's just looking at the horizon because I guess if you look at the horizon,
yeah, that's supposed to keep you calm.
Yourself.
Well, it sounds like a great trip. I'm sorry I missed that one.
Yeah, it's always been my dream to be on Deadliest Catch, so I'm envious of you.
Yeah, the other highlight was the '80s band that we saw because I thought of Sebastian while I was out there dancing. I was like, he would fit in here quite good.
It's always nice to be dancing with your wife and thinking of Sebastian. That's just a healthy thing all around. I'm sure she would appreciate that. I'm sure he would appreciate that to no end, too. Yeah. He likes to be top of mind whenever possible. All right, and with the team assembled, we will dive right into the trading block.
the trading block.
All right, and that trading cacophony means it's time for the old trading block. This is, of course, the portion of the show where we discuss the day's action, the day's activity in the old markets, and it was an interesting one. We had a general uptrend to most of the day, and then towards the end of the day, we saw a strong surge. So most of the indices finished, actually all of the major indices finished up on the day. We saw the S&P up about a little over 1% to 1329 today. The Dow closed up a little over 1% as well to 12,652. The NASDAQ closed up about 17, almost 18 handles to 2836. And the good old VIX cash tumbling to the downside, down 11%. We talked about it being up 11% on our most recent show. Now it's back to the downside, down 11%, closing at 21.68 on the day. And a lot of interesting news, of course. What sent the market into a tizzy towards the end of the day was, of course, the news that the central banks are preparing to perhaps make some coordinated efforts to help out Greece after the election. And of course, you know, in this marketplace, any news that bolsters Greece ends up bolstering the market as well. So, John, did you guys have a flurry of late day calls today given this news?
Yeah, I literally walked in from grabbing my lunch at about 1:45, and I'm walking past the TV, and I hear them screaming like there's some news, and I look at the chart that they got on there, and it's just straight up, and I look at the wall board, and it's just jam-packed. I mean, people want to know what's going on. We're pretty good about disseminating the news, but yeah, it seemed all to be revolved around some more softening by the central banks, and we start doing what's the under-over on the QE. You know, is we going to stop at 5 or 6, and you know, they continue to print money, and you know, market continues to go up.
Well, when's the QEs ever going to stop? I mean, why would they stop? So long as the markets keep going up and people keep getting artificial happiness, why would any politician ever want to stop such a thing?
Artificial happiness. We tend to have a strong libertarian bent on this show, and we're leaning that way again today. But yes, artificial happiness. It's always, well, is there any true thing as artificial happiness? If you're happy, are you not just happy, sir? Is all that money flowing into your account, is that not true happiness, sir? I give you that. I pose that question to you, sir.
Well, when we have to start paying $17 a gallon for gas, we'll see how happy we are then. But by gosh, the average American salary is going to go up from $38,000 a year to $120,000 a year just because of our smart politicians.
Yes, there's a lot of interesting talk about the appropriateness of the big government stepping in. Of course, they have a different take on that over in the Eurozone. That tends to be more par for the course out there. The governments are far more intertwined in the economies than they are here. So it's a little bit of a different conversation when you're talking about Greece and Spain than you're talking about over here. Of course, that wasn't the only the big news. I know, John, you're a commodity guy. Were you watching the quota, OPEC quota stuff, and the fact that the quota was unched? I know you like checking out your oil and your USO every day.
I do. I'm staring at it right now. July front month crude up $1.65 right now at 84.28. I mean, look at the move we've had. And I talked about this when it was at 90, and I thought it was going to take a pause, and that pause was about 2 to 3 days until it continued lower. But I know I had talked some people out of their short positions at that point. I had a good conversation with an oil trader yesterday, and he had closed out all his shorts, and he said he was about ready to go long. So I'm hoping he did that prior to the open today. But for an unchanged, I think it's just oversold. I mean, I think you saw a nice bounce here. I think I didn't see what the move was after the announcement of the central banks, but I got to think it mirrored the broader indexes, and we saw a nice jump in oil as well. I watched it this morning. I think we were up, maybe 40 to 80 cents, up $1.60. It more than doubled its net change on the day. So, what you see here, I have to check the other commodities. Let's see what gold did real quick. I think we're still hanging on to June, and we're rolling right now. Yeah, up $7, not as much as you'd think, but when the central bank says, here comes some more cash into the system, you generally see all the commodities rally, except of course for the 10-year note, which was down about 11 ticks today.
It's funny. We are in the height of the proverbial summer driving season, usually a strong bullish time for crude and all the blends that follow therein, and yet it's just oil seems to have a hard time catching a bid these days, which is interesting given all the, I know so many diehard oil bulls A lot of them seem to be Canadian for whatever reason. They love their natural resources up there, who just any downtick, they gobble up all the oil they can get. So this must be just bitter times for a lot of those guys watching oil, and just you can't catch a bid.
Yeah, when we talk to our contacts in like Cushing, they say there's stock full of inventories and overabundance, and Canada is only getting better at refining those oil sand pits that they have up there, or whatever the hell it is. But I think some of the news that kind of started was Iran came off the table. They were going to shut down the straits, and they were going to continue their nuclear ambitions, and they came to the table, and it's just the news dictates the moves right now, is whether it's commodities or stocks, and you don't see Iran in the news right now. So I mean, it kind of started to trail off, and then the people that have been directional traders and have rode that crude oil to 106 and change, and they got out and possibly reversed. I mean, it was quite a move lower that we saw.
It's interesting you mentioned the oil sands up there. I know quite a few people up there in that Calgary area or the Alberta area where the oil sands are. And I've always been under the impression that this would actually be tough times for them, because it's such an expensive process to extract that oil from the oil sands. You need to maintain a certain base level in crude. I forgot what that level is. I'm pretty sure it's north of 100 to really make that process worthwhile. So if we stay at these south of 100 levels, well south of 100 levels for the foreseeable future, well, interesting to see how that impacts all of those secondary sources like those oil sands, because it's more expensive to filter that stuff out of sand than it is to just pump it out of a well somewhere in the Persian Gulf. At least that's my take on oil.
No, I've heard the same thing. Yeah, I mean, there's a cost of production. I mean, even when nat gas fell below 250, they would say, it doesn't have much further to go, because of the fact that some people just stop, producing. It's not worth it. They run a negative cash flow. So, and then that drives up to not demand, it reduces supply, and same thing with oil. I mean, if they say, hey, this isn't worth it, or we're not going to make any money, there's no purpose in continuing to filter out the sand. I have to go up and see what those things look like, because I have no idea what a sand oil pit looks like, or
just don't step in it.
Yeah. You think quicksand is bad?
Yeah, exactly.
Sand.
You'll never get out of that oily sand. That's just a nightmare waiting to happen. Uncle Mike, we haven't had you on the show in a while, so we haven't had a chance to get your feedback on the whole WWDC stuff earlier this week. Obviously, that moved Apple a little bit. Perhaps not in the direction everyone expected, or perhaps not to the degree everyone expected. Were you prepping quite a bit going into this week for some big movements in Apple that didn't really materialize, or what was your take on the Apple news earlier this week?
Well, what we've been doing with it earlier this week, we got into last month was a pretty good month for us in terms of hedging Apple, in that we made probably about 8.5 points on it per 100 shares or so.
That was your back spreading extravaganza, correct?
That was the back spreading extravaganza. So we ended the back spreading extravaganza last week. And what we liked about the kind of the benchmark that I use for it as I'm making the analysis on it, do I think, and I guess this will be a new advanced trading term, the back spread extravaganza trade, is that going to at least be even with what a collar would do in terms of protection? And if we feel that the answer is yes, then we do it. And if not, then we'll just go back to the collar. And so with that, the benefit of doing the back spread extravaganza is that you'll have unlimited upside, theoretically, while still having the hedge put in place. So with all that in mind, we're still back spreading this month, and we did our first roll, I forget it was yesterday or the day before, but we're at the 585 level, to where we bought 2 585 puts and then sold 1 620 put in July. And we rolled down from 585 to 575 yesterday, or I forget if it was yesterday or the day before. And so ideally, if we want to look like geniuses, like last month, so to speak, Apple goes back up to 575 or goes back up to the 580, 585 level. We can roll back up, adjust the put, sell a covered call, a variety of things that we can do. That's kind of how we're playing it. So I think that going into this, I do think that Apple's still going to have a lot of movement. I can definitely see Apple being at definitely going 20 to 30 points either way over the course of the next 5.5 weeks. So I still think that the back spread is the way to go with hedging Apple for this for this point in time right now.
As our friend Andrew would say from Maine, the lobster himself, you have to do the back spread and then do stuff. And then like that covered call kicker, and then you're golden. Yeah, so certainly a lot of fodder for activity in Apple backspreading land. There was some interesting developments coming out of WWDC. People always, not just the hardware stuff and everything else, but there were some interesting glimpses into what Apple may have on the horizon. Not so much on the TV front yet; they're keeping that off in the distance. But some of their payment things and how they're making it easier to start paying with your Apple ID and your iPhone. I mean, eventually, those devices are so ubiquitous, you could easily start seeing that being a credible payment rival. You walk into McDonald's, you pay with your iPhone. I know right now you can walk into the Apple store and pay with your iPhone without even talking to a customer service person. You order it online, you walk in, you pick it up without even talking to anybody. I think you just take it off the shelf and go. So they've already gotten that way with their own stuff, and we'll see how far Apple's reach can cut. And then, of course, taking 30% off a lot of different merchant transactions becomes an appealing prospect. So they're starting to spread their tendrils out in some other interesting areas, which, of course, is interesting to watch as we keep watching. Apple, of course, today closed 571.53, down about 0.1% today, so not exactly a big, in Apple annals, a pretty non-event day. How was the BBI today, Uncle Mike?
Oh, I fell asleep when Apple doesn't move 20 points in a day. I mean, I fell asleep, and I think I wet my pants just because I fell asleep. It was so boring.
What's the at-the-money vol on Apple right now? Isn't it below 30? Implied vol?
I'd have to bring it up.
I was trying to explain volatility to a customer today, and I went to go use Apple versus Microsoft, and I think Microsoft was over Apple.
Wow, I knew it wasn't exactly the highest vol in town, but I wouldn't have guessed that.
So then I went to Denron, DN, and we fixed that right away.
Okay.
But what did you have? I thought it was around 30.
Let me bring it up right now.
Well, front month is south of 30. It's about 25. Of course, front month is kind of a dubious measure right now. It's got only a few days left to go. Let's look.
It's such an early expiration this month.
Yeah, it did kind of take me unawares. I said, oh, it's expiration time again. Let's roll out to the Julys, and maybe that'll give us a better inkling here. The July 575s are right now about south of 30 as well, 27 implied vol. So yeah, in Apple land, that's an impressively low level.
Yeah, right. I mean, and then look at the chart. It hasn't done anything in a month.
There you go. John Grigas says load up on ATM straddles in Apple.
And do nothing. Or wait, do something. I forget which is it.
No, but that is a good point. And some of our other shows, people don't like to discuss buying vol. They always say, sell or don't sell. So this is definitely a scenario where you probably want to think twice about selling. At the very least. I know all your customers out there, John, who are degenerate premium sellers may want to keep their powder dry in Apple, at least for the time being. Maybe they actually structure some long premium trades for a change. We like the old Iron Fly. We always talked about that. It might be a good time to start thinking about constructing some of those in Apple. You get short legs and short wings along the guts, and you get a few nice moves like we saw last week, and that could be an interesting trade for you. Speaking of Microsoft, before we close out the trading block today, the other big news of the day is essentially the Microsoft affiliate now, Nokia, just continuing to circle the drain today. They announced they're cutting another 10,000 jobs, which is insane. They've cut since their new CEO took over in September of 2010. So not even 2 years, a little over a year and a half. They've slashed 40,000 jobs at Nokia. Who would have known they even had that many jobs to slash? I mean, this is talk about what is left at this point. This 10,000 jobs represents 1/5 of their total handset workforce. So apparently they have 50,000 people working there, cranking out handsets. This Nokia is down about 15% down 15% today to close at $2.35. Just a rough day for Nokia. They're down 50% since April. This is just not good.
On good volume, too. Look at that, 112 million shares, too.
Yeah.
Averaging 33 a day.
Yeah, I mean, they usually average about 33,000. They did over about 100,000 contracts today. So interesting stuff.
Billion.
Yeah. Well, I'm looking at the options.
Sorry. Okay.
This is an option show, after all, John. I'm not sure if you're familiar. We don't talk about these underlying
we trade stock
things.
at Options Express, too, just in case you guys are worried.
Yeah, right.
Listeners.
But, this is the second profit warning for Nokia since April, hence the 50% slash. 2 in a row. That can't exactly be a good sign. And everyone knows that they just pushed out their big flagship handset, the Nokia 900. Apparently not exactly, or maybe it's a Lumia 900. Not exactly lighting up the tape, apparently. But, they've already got a massive investment from Microsoft. The current CEO is a former, I believe, VP from Microsoft. So there's a lot of ties there. And with the stock hovering south of $3, how much longer can it be before Microsoft just gobbles them up, you think? Are we looking at another repeat of Motorola with Google? Gobbling them up, getting the patents. In this case, this gives Microsoft an actual manufacturer of handsets. They want to compete in that space. It might be an interesting time to start to keep an eye on Nokia going forward. We'll have we don't have them in the odd block today, but interesting stuff nonetheless going on in Nokia. You guys been watching this one at all? Any calls today on Nokia, John?
Not many calls, but I think you're dead on with with Microsoft taking a hard look at it. I mean, the more I read about Google and the more I read about the fact not only handsets, but they're going to be doing, the Nexus tablet looks like it's coming out within the next month. And I think really that obviously they're really late to the party with Apple dominating that type of market, but Google's going to be in there, and I think Microsoft inevitably is going to do the same thing. So, how low it's got to fall before they take it out, who knows? That's anybody's guess. But I think once the rumor mills start churning up again, we'll see more calls on the trade desk.
I was pricing it out this morning, given all this news, and it's one you want to kind of keep your distance from a bit. But you can also structure some interesting bullish risk reversals on here if we're for some relatively fair levels, provided you incorporate a nice downside put kicker just in case the worst comes to pass, because it doesn't look like Nokia at this point is one of those, it's off to the races because they get acquired, or it's heading to zero. I don't see it, hovering in this range for, it could hover here for a while, but I don't see it settling out at 2 for the next couple of years. I think there's some movement eventually, whether that's to the finally flush the rest of these jobs, or if it's going to be the white knight of Microsoft, aka Ballmer, coming in to gobble them up. Interesting stuff. Everyone these days is fighting for patents in the handset world, so that might be the cheapest way for Microsoft to acquire. I don't know. Let me pull up, see if I can get what their market cap is now at when they're trading south of $3. I read something today that this is the first time they've been south of, I think, 2 or 3 euros in about 10, 15 years. It still says has a market cap of about $10.5 billion. Microsoft just spent 8 for Skype, so I think they could shell out another $2.5 billion to pick up an actual company. What do you think?
Yeah, drop in the bucket, right?
Yeah, so Bill Gates doesn't get to go on vacation for a week.
I think he could swing it. All right, and that is going to do it for the old trading block today, and now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and that funky tune means it's time for the old Odd Block. And this is, of course, the portion of the show where we break down some of the interesting options activity we were watching today. And first up on the old Odd Block is actually a repeat offender to the Odd Block today. This is the name we've talked about on the Options Insider quite a bit over the past year, and also talked about on this show a few times, most recently back on episode 56 of May of last year. This is Tenet Healthcare. This is an Odd Block special in many ways, because this is one of those sub $5 names that we like to talk about every now and then. And this one lighting up our ticker again today with, this is, of course, a hospital operator. They are a for-profit operator of a variety of hospitals. They closed today at $4.67, a whopping $4.67. Pretty much unched on the day, but not from an options perspective. This is the name that normally does south of 500 contracts a day. They did nearly 17 1,000 today. So a lot of people piling in to THC today, and this kind of repeats a pattern we've seen on THC for a while now, where it's been popping up on our site quite a bit. And when we discussed it last time on the show, it was with a flurry of takeover chatter that prompted a flurry of upside calls. In fact, the last time we talked about this name, they did about 37,000 upside calls ahead of some rumors that were coming out that it was going to be taken over. Of course, that didn't really pan out, and we're seeing a similar influx of call buying today in THC. If you look over the strikes here, there's essentially one strike. Everything else is a 12 lot. Well, there's a 900 lot here, which is the AUG 5. Someone spread off the Julys. We saw a ton of people coming in to buy about 15,000, over 15,000 actually, of the July 5 calls today, including a massive block of 14,250 for 30 cents. So a lot of people speccing on the upside in THC. What's interesting about this, too, we've talked quite a bit on the show recently about the impact of open interest and average daily volume on your trading and whether you should enter into names that have thin open interest or thin average daily volume. Here's someone coming in and buying more calls in one trade than the entire outstanding open interest of
about 7 times that amount.
Yeah,
right?
Exactly. So this guy clearly not afraid of putting on a sizable position in THC. As we said, not the first time we've seen someone come in and load up on upside calls. It seems to be a repeating pattern in THC of late. We've had it on the site a number of times. All you need to do is go to theoptionsinsider.com, type in THC into the search bar, and you'll find a lot of interesting articles that reference this name. All of them seem to pretty much follow the same trend of people loading up on upside calls. Of course, this also follows this week, not so much specific takeover chatter, but we saw Citigroup with their analysts upgrading the entire hospital sector, so that gave them a boost. They also upgraded THC specifically to buy from sell. That's quite a change. Normally you see people saying, from underperform to outperform or something like that. From hold to buy, not from sell to buy. That's
but that came from the 180 analyst group, though.
Yeah,
didn't it?
Exactly. We hated it. No, we love
them.
Yeah. Listeners,
they're a subsidiary of the 50% guarantee group, I believe.
Listeners, in case you wonder why we have such a dim view of analysts on this show, this is exactly why. Apparently, they've changed their mind, and now this sub $5 stock is a screaming buy. They had a price target of 4, which is why it was a sell. Now they've changed it to a price target of 6, and now it's a screaming buy. So needless to say, a lot of options paper followed suit, and people poured into gobbling up upside in the mostly July, a little bit of August, mostly July 5 call. So we'll keep an eye on this one as we have in the past. This is not the first time we've seen upside calls gobbled up in THC. John, any of you OX boys get in on the action here in THC? Take any calls for this one today?
We saw a couple of calls, but it was mostly not on THC, but on the health field in general. We're getting some people that are inquiring whether the healthcare may be a good buy because of the fact that the announcement from the Supreme Court should be coming out next week. So people want to kind of make a play on that. They think they may be able to get in there. So I'm wondering if this guy has maybe the same idea. Obviously, he's putting a little more skin into the game, but doing what he said, a 14,000 and change block or amount of contracts. But we're seeing people inquiring whether that's going to have any move on the health sector as a whole. So individual ones are starting to gain more activity on the desk.
Yeah, what would be a good play going into the healthcare announcement? How would you play that? Just basically just doing what you said, or would you do something on the healthcare sector ETF, or are there other ways to play that? Because I would imagine that's going to be a big mover in one way, shape, or form.
Yeah, but I'm not sure which way. I'm not sure if the Supreme Court strikes it down, is that going to be negative or positive? That's why I'm staying away. I mean, unless you have a clear understanding of the direction that the markets or the healthcare sector is going to move when the decision is made, you got to kind of sit on the sidelines. But, people like to play the news. If there's no, we're not in the earnings right now, they'll move on to, FDA reports and decisions and any type of other big economic news that they can kind of get a shooting star off of. But I got to think the healthcare ETF would probably be one of them. There's not much volume on it. I don't even know it offhand. we have seen calls, people inquiring about the decision and how to play it, and really, it's not clear how to do it.
Yeah, it's a difficult one because, it has some aspects of some people wanting to lean the way they leaned going into the debt ceiling debate last year, where regardless of what happens, there's a decision, so vol is going to come off. Some people wanting to spec to the downside from a vol perspective. In that sense, others taking the opposite side and saying, well, we think it's going to come off negative, so it's going to be a boost in vol across the board in this sector, so we're loading up on premium in this sector. So you're right, I've seen actually a nice little two-sided market. I think a lot of people last year too got very burned doing loading up on short vol or loading up on downside, and let's say the VIX going into that debt ceiling debate, because of course all the subsequent disasters that followed led the market off to the races and led the vol particularly off to the races. Maybe people got burned doing that and don't want to do this again. But this is a very specific way to play it. This one guy apparently thinks that THC is uniquely positioned to thrive south of this, or I'm sorry, subsequent to this announcement. In this show, we've never been big fans of just loading up on naked upside, and that seems to be what this guy did right here. I don't see much in the way of a spread or any of even Uncle Mike's nice little back spreads to play against this. He kind of just loaded up on upside. That's probably the one way I would not play this, just because regardless of what you think is going to happen, that's a rough road to hoe from an options perspective to make money. We prefer more nuanced positions in here whenever possible. At least give us a vertical. At least give us a nice little vertical to hedge off some of that risk. If not, something like a Condor, or my favorite, the old Iron Fly, or maybe the bullish or bearish risk reversal, or perhaps even Tusaw's favorite, the 1/3.5/6 ratio, a Condor swap.
Oh, I don't know about the 3.5. I go up to 4.5 these days.
Oh, you're swinging for the fences these days, so I don't even know who you are anymore.
Be more cautious. Be more cautious. I have a little bit more premium in there just in case. By 4.5.
All right, and following up on the old odd block, we have changing gears completely, actually. This is not at all related to hospitals. We have Safeway, ticker symbol SWY. This is, of course, the grocery chain operator. They closed today at $18.20, up about 3% on the day today. And this is in the wake of their earnings, which were better than expected. Kroger also announced a stock buyback of about $1 billion. So that combined 1-2 punch seemed to give the stock a decent lift today. We saw, of course, overall, Safeway hasn't exactly had a banner year so far. They hit about 17.5 yesterday, which is their lowest price in quite some time. And I think given this vacillation in the underlying, usually we see people coming in and perhaps with a stock that's been hit as hard as this one has and having some decent news, maybe positioning for a pull or a gap up in the stock, or maybe some people really coming in and thinking that the trend is going to continue and this name's going to be circling the bowl for a while and gap down lower. We actually saw a lot of mixed sentiment in this name, which is kind of interesting. We saw people coming in today picking up 1,000 of the July 19s, so near-term out-of-the-money calls for about 30 cents a piece. We also saw people rolling out to December and taking a little bit longer-term view on this one. People obviously thinking that the other side of the coin, that the worst is still to come for Safeway, and that 17.5 level they hit the other day is just the beginning of where they're heading, because we saw someone picking up about 2,000 DC16 puts today as well for about $1.15 as well. And this is the name that overall is not doing a ton of volume, but today did about roughly twice its ADV, about 6,000 contracts today. So these two bets represent some substantial percentages of the existing volume for today. Interesting mixed sentiment overall in Safeway. And that's going to do it for the old odd block. And now we're going to dive right into the express block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music means it's time once again for the Express Block, the portion of the show where the boys from OX take the reins, and I get to take a seat. So, Mr. Grigas, what do you have in store for us today, sir?
That's right. You're doing the show standing. So a seat and a drink, or just sitting down today?
A little bit of both, perhaps. Perhaps a beverage in one hand and a nice seat underneath.
There you go. Look out the window. Dream.
Exactly.
Well, we had and I know we're not beating a dead horse here because there's a newer development, but we had the Facebook IPO on the 18th. Clean up messes for about 2 weeks, and then I go down to Florida for a week and a half, and I come back, and I got to imagine that we're done with this, right? I mean, everything that can be done is done, and we've moved on. Apparently not. So yesterday at about noon, we got a NASDAQ OMX memo where they've started a Facebook member accommodation program. And I'll read some of the it's a long memo, 4 pages here, but it has some interesting things that we can talk about on the show. But the gist of it is that NASDAQ is reviewing with the SEC a proposal to establish a one-time voluntary program to expand the pool available to compensate members for qualified losses arising directly from the IPO cross-system errors in Facebook on May 18th, 2012. We all know the delays that people at OX and other broker-dealers and online firms experienced that day on getting fills back from the NASDAQ in a timely manner. A lot of people had placed orders at 42, which was the IPO price, I believe. Now down at, 27.5, 28. It's hard to believe that they've got this one wrong, on the show that we're usually saying, wow, how could they price it so low? Well, this one, obviously they got wrong because they priced it too high. But the NASDAQ is asking broker-dealers and OX included to pull information regarding customer orders. And if I get this right, it's if they were placed at 42 exactly. Now, we didn't have many orders that were placed there, a few hundred, but, we're not primarily a stock trading firm. We're an options firm, a derivatives firm, futures firm. So the amount that we had was low, but it's looking like that if you had placed an order at 42 and didn't get it back in a timely manner, they're going to do some type of compensation. But if the more you read the memo, it almost seems like they haven't made a decision on whether they're going to accommodate or what they're going to accommodate. I think that they're just trying to pull information as to what their exposure is. Like any good trader would do, they're trying to find out what their loss would be prior to entering in any type of agreement. Kind of a lesson for retail traders on how you should trade yourself.
With it, just real quick with that, you say you traded at 42. Do you mean if they placed the market order while it was at 42 or put in a limit at 42?
No, it's only for orders that were eligible for the opening cross. So, when we conferred and we tried to dissect it, because it refers to a lot of different rules in the NASDAQ rule book, but one person said it was only if they placed orders right at 42, but when I read it, I kind of came across 42 or less. I'd have to look into it a little bit further. I was looking for it online so I could forward it to you guys prior to the segment. But so what we're going to be doing, they gave us, because it's only been a month, they gave us about 6 days, business days to get this information to them. They asked for about 15 different parameters. MPID number, symbol, date, order time, cancellation time if applicable. They also need to know the offsetting trade if one was placed. So they're asking for a lot of information, but we are seeing a lot of calls on the desk. They've tapered off, but in the week or two that was following, it was, what are you going to do? I don't want this trade. I want to be made whole. And it does look like the NASDAQ is trying to do something for members, okay, not for individual retail clients. Obviously, this would trickle down to those people, but they are trying to do something. It doesn't look like a full effort, because they're only doing for certain types of orders that meet this particular criteria, and the window is pretty small here. So, like I said, for us, where we did, I think, over 5,000 trades that day in Facebook, it's going to be less than probably 5% of those trades. Other than that, overall, it doesn't look like there's going to be any other type of accommodations made to people who suffered any type of loss on that day.
Those people who were working those 42 orders, where do they end up getting filled, the bulk of them?
We mostly got our orders filled around 38. We route to Knight and Citadel as well, and we just weren't getting orders, but nobody was getting orders back. So we understood that. So we took the liberty to go ahead and fill them at the opening price, which I think at that time was printed at $42.05. But we went back and actually modified hundreds of those orders because they were just a bottleneck and they didn't make it through. And at the time they did make it through, I mean, it sold off fairly quickly, as I recall. It didn't hang around 42, even really surpass that level.
Yeah, I think it ticked at 45 briefly. Someone got a one lot off there, and that was about it. And then it went right back south to 38 and never really looked back.
Yeah, so I think at the time that the orders actually were allowed to get into the NASDAQ exchange, that they were actually all filling at a lower price. I just don't think any of these actually made it, and filled on the open. We saw the problems forthcoming, but I would say it's nice to see an exchange stepping up and doing the right thing, but they're just kind of trying to do something. This information is going to the exchange and FINRA, I believe. So they're probably they are getting a little pressure from FINRA on to do something to accommodate the members and the clients that are the customers that are clients of these member firms.
Well, it's good they're doing something. Actually, I mean, it's about as little as they possibly could do. So, but they're doing something.
Yeah, I'm sure they were in a room and FINRA's like, you got to do something, and so we can put it out there. And this looks like what they've begun to do. And so we're going to spend a lot of more man hours trying to get all this information. And there's no guarantee that they're actually going to act on it because they probably want to see what their exposure is.
Good old FINRA, late to the party, inconsequential, ineffective, of dubious value, causing a lot of burden and excess costs. But yeah, we're so happy to have FINRA watching over us.
Well, yeah, long ago too. So no, I've always been a huge fan of the people, the hardworking people at FINRA, the FCC. No, I'm being completely serious. So love you guys, but so they're doing something, but it's another process that will take time, energy, money, that may have no outcome, all surrounding how NASDAQ, handled this IPO. And I'd just be surprised to see how many IPOs they're going to have in the next 2 to 3 years.
It hasn't been a banner. It hasn't been a banner for a few months for IPOs with the BATS debacle and then NASDAQ flubbing the biggest IPO ever. That's it's not exactly a good time for the exchanges or the technology of the exchanges, I should say. That's really what they've kind of fallen on their face.
Correct. Yeah. I mean, it would have been handled differently at the NYSE, but so we'll see what this comes of it. But just let you know, there are still other things happening behind the scenes that a lot of people might not be aware of. And we are participating. We had a meeting. And pretty much what came out of the meeting is we want to do what's best for the customer. So we're pulling all this information, and if it improves prices on the few hundred customers that are eligible for this, we're going to get it for them. Switching gears here. This is expiration week. It's also quarterly. This June expiration. It's early. This month, June 15th, tomorrow, kind of caught me off guard because we normally do. We did again, but I had a late start to it. We call for people that have dividend risk for certain ETFs, SPY, Diamonds, XLE, XLU. I'll go X date tomorrow. SPY had a large dividend this quarter, about 72 cents approximately, as they don't actually give that figure until the X date, which makes it kind of difficult to notify people ahead of time. But we did our normal quarterly outbound calling. We reached about 200 people. That little boost at the end of the day that we saw from the central bank probably put a lot more people who were short calls in those ETFs at risk that we probably didn't get a chance to look at. If you're at dividend, if you have assignment risk and you'd be liable for that dividend, really the only thing you can do now at 5 to, as you're listening to this, right, Mark, because they won't hear this till tomorrow anyway.
Yeah, it's kind of a little bit too little too late at that point.
Is create a time machine and go back and hedge yourself or exercise the long portion of any spread if you do have one on. But
or pay attention to this show in the future, because you've said this how many times now on this show.
I say it every quarter because I mean the list that we've been doing this for years, and the list started out about 300, and it was about 700 or 800 accounts that had dividend risk this quarter. We just don't have the man hours the people to call these people, and they were huge amounts of assignment risk, 5 figures and up. I mean, they were, so we tried to call people that had $1,000 of risk or more, but we did, we still had another 500 people that had $500 risk or more. And a lot of people were home this time, which really slowed down the process. It was great to talk to these people because most of them were completely unaware. So it's a good educating, part of something that we do, and, a good touch point for customers. But, you got to be aware of that. You got to be aware of that. We had some people trying to put on a box spread last week, for about 10 cents or something like that. It was, what was he doing for 42 cents? And, I get a broker and he's like, look at this trade. I'm like, now I'm going to pull your call. And if I don't hear you tell him about the dividend, you're calling him right back. And then, the guy's putting it on 300, 400, 500 times, So
if you're putting on that many size box spreads through a retail account, A, that's kind of crazy. And then B, if you're doing it and you're not aware of the dividend risk in that position, then why are you doing it? That's someone you think would know better.
Because you don't know. That's why.
Because you don't know. Exactly. And I see it every quarter, every single quarter. And you should hear the phone call when we tell them, you just locked in a 30% loss, or we'll see if we can get you off for 10 cents and plus a commission. You're going to drop $2,000 or $3,000 here, guaranteed. I'll give you a guaranteed loser. It's just, you can hear the wind of, just being pulled out of the sale, because you go from thinking I have a guaranteed winner to knowing you're going to lose money on this trade. It's definitely not a good phone call. It's not a good conversation, but one that people need to have prior to putting their entire account into this type of strategy. Or call Tusa. He'll tell you.
There you go. Have Tusa walk you through how to do some stuff with the
stuff.
Do stuff and do it right. But other than that, you can tell that we're entering into summer. It's I think you guys probably have seen it too. Low volatility, not low volatility, but low volumes, kind of across the board this week for an expiration. So, I think the move we saw was today, and tomorrow should be pretty quiet.
Well,
that's it for me, Marco.
All right. Well, thank you for that, Mr. G. And because we are running a wee bit long, we have some great listener questions. We'll have to save those for next week. And instead, we're going to dive right into our Around the Block segment.
Around the Block.
All right, and welcome to the Around the Block segment. This is, of course, the portion of the show where we talk about what's catching our eye, what's causing consternation for us over the next few sessions. And as Mr. Grigas alluded to in the previous segment, tomorrow is indeed expiration. So as we've counseled many times on this show in the past, of course, what John just said about your exercise risk, that's a little bit too late at this point, because the show is coming out tomorrow. But you still have time, if you're listening to this in the morning, to look at some of your positions and just close out what you have, especially your shorts that are close to the at the money, where you're kind of a little bit dubious. You're one of these guys who's writing a lot of downside puts or doing a lot of premium writing, and you like to play it fast and loose and collect every last cent of that decay. Just do yourself a favor. Go through your positions, and you have ones that are pretty much winners. Just close them out. Take it off the table. You might you generate a few commissions. Most brokers like OX will give you reduced or even free commissions because you're taking risk off the table. It's good for you. It's good for them. It's a winner. You're closing out winners. Just go through your strikes and just close out what's close, because otherwise, how many times have we talked about on the show, things can come back to bite you in all sorts of fun and interesting and dangerous ways on Expiration Friday. So take that little bit of advice with you tomorrow as you're listening to this, and just run through your sheets. And if you have anything close, any shorts that are lurking and you want to get that last couple of cents out of them, just close them out.
See, I encourage you to leave them on because of the fact that I have longs.
You have longs. I knew you were going to say that.
Collars.
I knew you were going to say that.
I love getting lucky on things like that. So for my benefit, leave them on, folks.
So another reason to close out, despite Mr. Tusa. So
he's getting me. No, on a serious note, absolutely right. I think you're foolish to hang on for a penny unless you're willing to own or be short the underlying.
Yes, and sometimes at very unfavorable levels. We talked about Nokia today. Of course, Motorola is the famous example not that long ago, earlier last year, I believe it was, where they got gobbled up by Google and gapped up 10 handles over the weekend, and people who had forgotten about that or left some stuff out could easily have gotten bit by that. Nokia, we'll see if that follows suit, and they have a surprise announcement from Microsoft sometime in the future. But needless to say, a lot of interesting stuff going on, a lot of interesting names, and a lot of interesting movement in the market. Everyone's waiting for Greece. Everyone's waiting for a lot of interesting developments. So do yourself a favor and take those shorts off the table. Of course, aside from that, everyone is watching the Eurozone, watching Greece, watching Spain, watching that big vote coming up relatively shortly. I'd imagine that's, aside from expiration, that's the biggest thing on both of your horizons, correct?
The rain in Spain falls mainly on Greece.
Yes. Those tasty, delicious gyros. So, yeah, not too much we can say about that. That hasn't been said already on this show in the past, except for keeping your powder dry going into that as well. Interesting comments earlier about that healthcare debate. That is an interesting one. Maybe we'll have to look into that again next week about some interesting ways to play that, because you're right, that is an interesting development, and whether you want to go long premium on that or not in this environment and how you want to structure that trade is an interesting conundrum for a lot of our listeners. Anything else catching both of your eyes before we close out this abbreviated Around the Block segment, gentlemen?
On my end, I mean, we do have a few numbers coming out tomorrow that, you should take note, especially on expiration. So, like I said, it feels like it's going to be a muted session tomorrow. But if you don't want to, be surprised, you want to make sure you're aware of some numbers coming out tomorrow. You got Michigan Sentiment, which looks to be the biggest one, at 5 to 10 Eastern today, tomorrow, and Empire Manufacturing earlier in the morning. So we'll be watching that here.
So it'll be a nice early morning for Mr. Grigas. What time are you getting in tomorrow? About 3:30 a.m. or so?
No.
Staying overnight tonight?
Not at all. I've been missing having some late nights. Don't take vacation time because the work actually piles up when you're not here.
That's just what they want you to believe.
There you go. All right, and with that word of warning, we will close out the Around the Block segment. And also, unfortunately, this episode of the Option Block, I can't believe an hour has gone by already. Say it ain't so, but that is indeed the end of this episode. And before we go, starting with you, Mr. Uncle Mike from Know Your Options, Inc., what is coming up in the land of KYO that may interest and or intrigue our listening audience?
We're getting closer and closer to finding a new home, and for the broker with whom we use. So stay tuned. Continue to view our In the Know newsletter. A lot of exciting things.
Well, that is indeed good news. I know you guys had some interesting news last month, and you've been racing to find the answer to that. So I was glad to hear that. I'm glad to hear that you guys are getting close to a solution. We look forward to hearing that on the show coming up soon. And Mr. G, what is coming up in the land of OX?
Well, yeah, I'm also glad to hear that as well, too, sir. So good for you and Kavanaugh. But what's going on here is actually that these live site nights that I always talk about in lovely Cleveland, Ohio, in the Southwest are actually going to be in the Chicagoland area. The first one was yesterday, or 2 days ago, since this podcast will air on Friday, but it was Wednesday, June 13th in Naperville. The next one coming up is in Orland Park, my hometown, born and raised, Wednesday, June 27th at Giorgio's Banquets. I think I had my prom there. It's from 6 to 9 p.m. Joe Cusack, head of education here, is going to be out there explaining volatility, trading tactics, balanced with risk and rewards strategies. I think I'm going to crash the place and heckle Joe from the back of the audience. So look for the shady guy, sneaking in after the seminar has started, because I've never seen one in person, and I'm excited to kind of stop in, see the old neighborhood, and make sure Joe is representing OX professionally.
Now, live site, that means they take you through some live trading examples. Is that what that means? Or
yeah, I believe so. It's called a site night. So he'll probably talk about markets, a little background on him, some of the tools that he uses that help him become a better trader, and basically an overview of the website in general. So it's 3 hours. It's free. And like I said, I'm definitely going to stop in there and check it out.
And I can tell you from years of working with Joe Cusack that it's going to be more than 3 hours.
Are you saying Joe likes to talk?
Maybe.
All right. Thank you for that, Mr. Grigas, and, of course, Uncle Mike. And, of course, they couldn't make it today, but I'll give them a plug anyway. For the boys over at the Pit, by all means, surf on over to optionpit.com to check out what they have going on in their various mentoring classes and sessions and deals. And, of course, by all means, if you're interested in anything we talked about on the show today, the news, the analysis, the unusual activity, the education, anything along those lines, and surf on over to theoptionsinsider.com and check it out there. You can find all that information and much more. Of course, you can always search for us just search for Options Insider in iTunes or in Stitcher or in your online audio client of choice. And that is going to do it for us today. But before we go, all of us here on the All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such an ongoing success. And we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.